All right. So the next thing I wanted to do is talk about a few of the books. I'll probably have a little bit more comprehensive of a review as blog posts this week to go with these. But these are 3 books that I read at least part of on this trip. While flying from Salt Lake to LA, I read almost the entire Raising Private Capital book. And if you're listening to this or watching this on YouTube, you can take a look at it here. It's Raising Private Capital by Matt Faircloth. It's basically a Bigger Pockets book. If you're familiar with the Bigger Pockets forum and website, where, it's basically all real estate all the time over there at Bigger Pockets. But I thought this book was pretty interesting because it's about raising private capital. It's not written to me as the investor. It's written to the person coming to me trying to get my money for their real estate project, whether that's a fund or a syndication or whatever. So I thought it was really interesting to read about it from their point of view. And it's really interesting, right? They talk about how you can find sources of private capital. And they tell you to go find somebody that had a really good paying job, especially one with a good employer match. So they've got a 401k that can be rolled into a self-directed IRA. Or they tell you to go to somebody that has a paid for house or a big house that they can take out a home equity line of credit and use that to invest with you. Or then it tells you, go find some doctors, because the assumption, of course, is that doctors have money to invest. Well, here's the way I look at it, right? If you're a doctor, you have the money to invest. You don't have to go find somebody with, private capital for you to borrow for your investments. But I thought it was a pretty interesting book. If you're interested in real estate, particularly syndications and that sort of a thing, it's really good to get the perspective of the people on the other side. And if you're interested in becoming a syndicator, it would also be a great book to read. But just for general, knowledge of even real estate investing, it might not be the first book you should read. However, if you're in one of those unique situations, this may be a book worth picking up. Again, it's Raising Private Capital by Matt Faircloth. En route from the PIMDCon conference to Denver, I read about half of a different book, and this one is from Cory S Fawcett. If you remember Dr. Fawcett, he is the general surgeon who basically started about 12 years before he retired at 54, I believe, who started buying rental properties. And he kind of jumped all in. I mean, the first one he bought was a 4 or 6 or 8 door apartment complex. And he basically bought these properties, I think about 5 of them in 12 years during the latter part of his general surgery career. And he really enjoyed the deal making and the buying. And after a while, his wife's like, you know what? We got enough cash flow from these that we never have to work again. Stop buying them. And she made him stop buying them. And they just worked from that point forward, paying for them. But the nice thing about this book is not only is it written by a doctor from a doctor's perspective, but it's really a pretty good nuts and bolts guide. If you are interested in direct real estate investing, you want to go out and you want to own the properties and manage the properties yourself, I think this is a fantastic book. And in fact, it might be one of my favorites on real estate investing for doctors. Now, it's not going to teach you anything about how to pick a good REIT mutual fund. It's not going to teach you anything about choosing syndications or picking a private real estate fund, etc. But it will teach you how to buy and manage your own properties. And I think he gives good advice in that respect. For example, in his view, and I tend to agree with it, it's really all about the cash flow, right? If this is not a positive cash flow property, you shouldn't buy it. And the reason why is with negative cash flow, I mean, you can only support so many negative cash flow properties with your practice income. But if the cash flow is positive, well, there's an infinite amount that you can have because it doesn't actually cost you anything. But where I think Dr. Fawcett has done a particularly exceptional job, and it doesn't sound like he did this up front all at once, but over time he got better at it, was putting systems in place to make the management easier, right? Because you think about the reason why I don't want to do direct real estate. I don't want anyone calling me at 3 a.m. to unclog the toilet, right? Well, he basically never goes and unclogs toilets. Not only because he says people rarely call to have their toilet unclogged at 3 a.m., but also because, you can pay somebody else to do that. You don't answer the phones at your clinic. Why would you be unclogging the toilets yourself, right? In this other business that you own. And so the systems he put in place, I think, are worth learning as well. This is his fourth book in the series. He calls them all The Doctor's Guide to Whatever. And this one's The Doctor's Guide to Real Estate Investing for Busy Professionals. Perhaps the most interesting part of it, I thought, though, was that I kind of viewed him as this Dave Ramsey for doctors, very, very, very anti-debt. One of his other books is all about, getting out of debt as a doctor. And he's super anti-debt. But apparently not when it comes to real estate investments. So I think he's still got leverage on most of his real estate investments. And I thought that was interesting to learn that. But if you want to check that out, you can buy that at Amazon. The links to these books, of course, will be in the show notes. Now, on the way home from Denver to Salt Lake, I got a chance to read, looks like about half of this book by J. David Stein, Money for the Rest of Us. And he has a podcast. It's about the same size as this podcast, fairly popular podcast. And apparently his podcast listeners were always telling him, is there a book I should read? What book should I read? And he decided rather than sending them to somebody else's book, he would write the book himself. But he's a very common sense investor. He used to work in I think it was a hedge fund or some other type of institutional fund. That's kind of his background. And he goes through step by step on how to kind of think about your investments. It's not really about personal finance. It's all about investments. But if you look at it, the book is structured around 10 questions. And the idea is if you can't answer these 10 questions, you shouldn't be investing in that asset. For example, the first one is, what is it? If you don't know what the investment is, you shouldn't be investing in it. The next one, is it investing, speculating, or gambling? I thought this chapter was particularly interesting. He talks about, somebody by the name of Dr. Kingsley Jones, I don't know, who describes a gamble as a bet of prospective negative return with reasonable statistical reliability. But he talks about speculation, again, with a quote from the same guy saying, it is a bet about which there's viable disagreement on the sign of the return. You don't know if it's going to have a positive return or a negative return. That's a speculation. And I think it's very much a useful construct to think about it. But he says this about one of the most prominent speculative instruments of our day, which is Bitcoin, right? So he gets an email from a listener asking what he thought about the Bitcoin dip last year. And then a friend texted him about whether he should buy more Bitcoin. And he says, speculation means there is extreme uncertainty about whether the asset will rise or fall in price. A 40% decline is not a dip. A dip suggests a temporary setback before the price continues to climb. But with a speculative asset, there is no way to know if it will rebound or continue to plummet. There isn't a correct price because there's no income to determine if the price is too high or too low. Investments differ from speculations because there are objective measures to determine if the asset is valued more or less than its historical average. For example, with a stock, you can observe the price that investors are willing to pay for $1 worth of earnings, which is known as the price to earnings ratio. An investor can compare a stock's current PE ratio with its historical PE ratio and with the PE ratio of companies in the same industry. This allows the investor to make a judgment about whether the stock has a lower or higher valuation relative to its historical average or to its peers. With the speculation, historical comparisons are difficult because there aren't earnings or income streams to compare the price against to determine if the asset is cheap or is expensive. All we have are the historical prices and perhaps some data on supply and demand for certain speculative assets like commodities, which obviously you don't even have for something like Bitcoin. The other questions the book goes over include what is the upside? What is the downside? Who's on the other side of the trade? What is the investment vehicle? What does it take to be successful? Who is getting a cut? That's an important one. How does it impact your portfolio, right? Because you never look at an investment in isolation. And finally, should you invest? So I think this is a good book. I think he's given good advice in it. And if you're looking for a good financial book to read this year for your continuing financial education, this certainly is one of them. Money for the Rest of Us by J. David Stein.
My dad, your host, Dr. Dolly, is a practicing emergency physician, blogger, author, and podcaster. He is not a licensed accountant, attorney, or financial advisor, so this podcast is for your entertainment and information only and should not be considered official, personalized financial advice.